How's it going, everyone? It's Sam. I woke up and I was not expecting to see what just happened, which is China introducing a lot of stimulus, introducing a lot of money, introducing a lot of quantitative easing. And yet, it does not surprise me. We are in a world where we are going to constantly see governments try to prop up economies and then overheat them and then have to cool them down and then try to prop them up and try to keep them like right on the tightrope, right on the line, right on the fence. And that's what we're seeing here today. I want to show you what just happened. A massive stimulus package, massive kind of emergency package that was announced. And I want you to let me know what your thoughts are down below in the comment section. If you don't mind, hit subscribe, turn on the bell notification underneath the video so you can see future videos like this. I'll be honest, I woke up a little bit early, a little bit tired, but was not upset when I woke up early to see this. But first, if you want to trade crypto, if you feel bullish after this, after what I'm about to tell you, you can check out the link to Margex underneath the video. You can go long the market. You can also short the market. You can trade the swings. And you don't need a KYC with the link underneath the video. You also can join in on this Casper airdrop. So you can hit the button right here, start trading, and get some money that will go towards your airdrop. Or, get some trading volume, which can give you up to $5,000 in Casper tokens. Okay, let's start here. Everyone is posting about this. China will cut reserve requirement ratio by 50 basis points, PBOC chief says. China will cut the amount of cash banks need to have on hand, known as the reserve requirement ratio. People's Bank of China Governor Pan Gongzhen said during a press conference Tuesday. Pan, who was speaking to reporters alongside two other financial regulator heads, did not indicate exactly when the central bank would ease the policy, but indicated it would happen by the end of the year. He also said the PBOC would cut the 7-day repo rate by 0.2 percentage points. To be clear, a 7-day repo is a type of short-term loan that the central bank uses to increase liquidity and influence other rates in the banking system. So they are cutting rates. They're reducing the amount that banks have to have on hand so that they can basically stimulate the economy with more loans. So this is quite interesting. I'll be honest. I knew the Chinese government was looking pretty rough these days, or the Chinese economy was looking pretty rough these days, but I did not see this kind of massive stimulus package, and there's more. There's more than what I just said so far. So they are lowering the repo rate by 0.2 percentage points. This kind of, I think, surprised the market because after this happened, China's 10-year government bond yield hit a record low of 2%. So when a bond yield hits a low or goes down in yield, that means a lot of people are buying it, and that's because they think that it's going to go lower in the future. So a lot of people buying this 10-year government bond during this address. So they lowered the RRR by 50 basis points. They're lowering the PBOC by 0.2% as well. They were expecting multiple 10 basis point rate cuts. So they were surprised to see a 20 basis point cut, kind of like the US, just with the different numbers. It was twice the cut that some people expected. The stock market on this news was up 4.15%. This is the Shanghai Composite Index. They also announced some other stimulus as well. So they're actually going to cut rates on some mortgages that are already existing, which is kind of nuts. Like imagine if you were locked into a 3% loan, then all of a sudden they're like, actually, we're going to cut it down to 2.8 or 2.9. Now, I don't know how much they're really going to cut. And I don't know if there's a certain threshold where they're saying, okay, if your rate's above this number, then we're going to cut rates. But still, that's kind of unprecedented, at least over here. They have eased rules for second home purchases. They lowered the reserve requirement ratio for banks, which provides fresh liquidity. They pledged over $100 billion US dollars or USD in equity market support. So they're also propping up the stock market. Some people are explaining it that basically different funds and companies are just getting money to go play with in the stock market. And then they're also studying a stock market stabilization fund, which sounds kind of like a company buyback, that they're going to provide cash for different companies. So like, I don't know, if you're a large company, maybe you get $1 billion or so, or $500 million to go buy back your own stock, which is interesting as well. Keep in mind that the property market and the stock market in China have just been destroyed over the last few years. I mean, take a look at this. Right? The all-time high was around 5,700 or so, and now it's at 2,800, so down 50% from its peak, and that was 16 years ago, 17 years ago. Even from more recently, 2021, it's down 20%. I mean, imagine investing for this long, and even if you invested at a good time, right? If you invested in 2005, this is kind of like a local bottom, you'd be up less than 3x in 20 years. I don't know. This would be pretty rough to watch, or pretty tough to want to invest in your own stock market in this kind of scenario, which is why I think a lot of people turn to real estate, but then real estate had a massive amount of problems as well. So now they're just coming in with some stimulus for the stock market, some real estate stimulus as well, and then hopefully injecting some liquidity into companies. So this is good for Bitcoin. This is good for crypto. This is good for risk on assets. This is good for commodities. Why? Because there's going to be more money. Fastest and most aggressive rate hike in history, and money supply is again at new all-time highs. Money debasement in the fiat system is a feature, not a bug. Bitcoin fixes this. Countries are going to still be at deficits. We're going to see monetary debasement, deflation, inflation. We're going to see the dollar get weaker and weaker. We're going to see that along with every other currency. So when BlackRock says, hey, you buy Bitcoin because of global uncertainty, you buy Bitcoin because of some problems in the economy, these kinds of debasements that happen, this is going to continue to happen. This is not like I think there might be a war, so maybe I should buy some Bitcoin. No, this is obviously going to continue to happen. Every single year there's going to be more of this. And of course, we can have rate hiking cycles that can kind of slow this down. But then it gets right back to, full steam ahead. We're going to have more liquidity. We're going to have more stimulus. We're going to have to provide more government programs. And then we get things out of control again, and then the price of Bitcoin shoots up. Right now, we are expecting a 44% chance of a 50 basis point cut at the November 7 meeting for the Fed. I know this sounds crazy, but that's just over a month away. Just over a month away. And then just over a month after that, we have another rate cut. And there's a 22% chance that we get a 50 basis point, then another 50 basis point. Even if we don't get that, the market's still expecting us to go down 75 basis points from where we are right now. So it's going to be interesting. There are going to be more countries that stimulate. There are going to be more countries that cut. There are going to be more government programs, more government handouts. Right now, Bitcoin is up a little bit on this news. I wouldn't be surprised to see the U.S. stock market and crypto in general up today because of some of this stimulatory action. And just, I feel like some people just need a reminder sometimes, like, oh, yeah, they are going to keep on printing more money. And they need something that actually hits the news for them to want to buy again. Inflows were a little bit light yesterday, so you can actually see Grayscale, $40 million outflow. Their mini ETF had $8 million of inflow. BITB and ARKB was $0 days. Fidelity had a plus $25 million day. And IBIT actually bought a little bit of Bitcoin. So it was a slight inflow day, $5 million, because it was 40 million out, but then 8 million, 25 million, and 11.5 million in. BlackRock not buying quite as much, or their clients aren't buying quite as much, but there could be a variety of reasons for this. I'm still quite bullish on Bitcoin, and I wonder if you are too. Let me know down below in the comment section. If you want to trade Bitcoin, there is that link underneath the video to Margex. Thank you so much. I'll see you all in the next video.